Nigeria's economy grows 1.4% in the third quarter, just as the Monetary Policy Committee begins two-day rate-setting meeting. Trafigura likely to win Ethiopian oil product import tender. Plus, Mali expects industrial gold mining to beat 2017 forecasts. Hello and welcome. Thank you for joining us on Business Incorporated. I'm Chimezi Obi Iwawu. Let's get started here in Nigeria as the country's gross domestic product grew by 1.4% in the third quarter of 2017. This is the second consecutive positive growth since the emergence of the economy from recession in the second quarter of 2017. Data released by the National Bureau of Statistics today shows this growth is 3.74% higher than the rate recorded in the corresponding quarter of 2016. Quarter-on-quarter, real GDP growth was 8.97%. Aggregate GDP was also higher at 29.45 trillion naira in nominal terms. Real growth of the oil sector was 25.89% in third quarter, representing an increase of 48.92% in 2016. The non-oil sector grew by minus 0.76% in real terms during the period under review. This is lower by minus 0.79% compared to 2016. The sector was driven this quarter mainly by agriculture and other services. Meanwhile, the Monetary Policy Committee of the Central Bank began its last meeting for the year today. The committee will review, amongst other things, the current state of the global economy as well as changes in key macroeconomic indicators in the local economy in order to determine policy directions for key monetary variables in the near term. Most analysts have forecast that the MPC will maintain status quo. However, looking at the short-term outlook of the Nigerian economy, analysts at FSDH Research believe the committee may be inclined to commence a monetary policy easing to signal the end of a tightening cycle. They expect the MPC to either reduce the monetary policy rate by a few basis points or adjust the rates around the asymmetric corridor of the MPR. The rates decision will be announced on Tuesday, November 21, and of course, Channels Television will be airing that live. And to the markets now, the Nigerian stock market continued its negative trend at intraday this first trading day of the week, down 0.21%. The EGX 30 index in Egypt was also down 0.26%. However, South African JSE index was trading in the green at 0.51%. Kenya was up 0.39% on Friday. In the Middle East, Abu Dhabi, the index edged up 0.22% at intraday after news that the initial public offer of the distribution unit of Abu Dhabi National Oil Corporation was proceeding. The offer could attract new money to the market. Dana Gas, which had tumbled 4.2% on Sunday after a London court ruled against it in its effort to have $700 million of its outstanding Islamic bonds declared invalid, rebounded 1.5%. Dana plans to appeal the decision and is also fighting its case in the United Arab Emirates court. Saudi Arabia's stock index was down 0.30%, while Dubai edged down as Emma Properties and Arab Tech Holding fell. In Dubai, the index edged down 0.19% as construction firm Arab Tech Holding lost 2% and Emma Properties fell 1.2%. Emma has been sliding since late last week when it priced the initial public offer of its local real estate development unit in the lower half of an indicative range. Qatar sank 0.25% as Big Bang slipped. The Masaraf Al Rayan losing 0.7% and Qatari Islamic Bank falling 0.9%. And in Europe, bourses there hovered around the flat line in early trade with any gains capped by political instability in Germany. For more, let's talk to my colleague in Frankfurt, Conrad Busen. Good afternoon, Conrad. Thank you very much for joining us. It's a beautiful week, isn't it?
Hey, Jimmy. Great to be back on Channels TV. Hello, Nigeria.
You're welcome. Now, in Germany's capital, Berlin, the talks to form a new coalition for a federal government have failed. Has this rattled the markets in any way, and does it reduce the potential for a year-end rally on the German stock market? And could this be the end of Europe's Iron Lady and her economy?
The end of Germany's Iron Lady, the end of Angela Merkel as Chancellor of the Federal Republic of Germany. Well, that would be a very big scenario. We're not there yet, at least. Mrs. Merkel, you know, has a reputation of getting better the tougher the situation is. And obviously, after yesterday's failure of the coalition talks in Berlin, things are definitely getting tougher for her. For markets people and from an investor's point of view, what's really important is basically two things. Number one is whether this failure puts at risk confidence here in Germany in the whole political system. And for the moment, this doesn't seem to be the case. On the contrary, it was quite obvious that it would become very difficult to form a coalition government of all those parties that never before had formed a coalition. Now, the fact that this has failed is not good news, of course, but it shows that the political system works, that there is a party which says, well, we can't find common ground with the others. Another solution has to be found. This, of course, means that you know, we will get more of the same. We have this interim government of Angela Merkel, which is not a strong government, but markets do not have to get prepared for great differences compared to before. The second very important factor for people on the markets is whether this has a negative impact on the economic fundamentals. And this is not the case either. On the contrary, today the IFO Institute for Economic Research said that it would increase the forecast for German GDP growth, for the growth of the economy here in Germany this year, to 2.3%. That's an increase of 0.4% compared to the previous forecast. As long as this remains intact, as long as the economy remains strong, we do not have to be concerned too much about asset prices here at the exchange. One thing has been more limited and influenced negatively due to this failure of the coalition talks. And this is the perspective of the German equity market for another year-end rally. We should take into consideration that the German DAX, the stock index here, has gained around about 12% since the beginning of this year. On this very high level, of course, the market needs a very positive impulse for investors to continue to buy company shares, an impulse giving confidence in the future. And of course, the failure of those coalition talks yesterday in Berlin is not such a positive impulse.
Well, that's quite interesting there. Now, let's look at the shares in RWE, Germany's large utility. Of course, they are gaining behind you there. The index is looking down, but they are getting big. Any connection with the failed coalition talks?
There is definitely a coalition a connection there. RWE's shares had lost around about 16% since the beginning of this month, since the beginning of November, when the German DAX had reached a record high. RWE's shares, the great utilities shares, were among the big losers after this record high in only a few weeks. And this had a lot to do with the coalition talks. In these talks, the Green Party was an important factor, the ecologist party, you know, the environmental, having its roots in the environmental movement. And there was talk about cutting off the coal-fueled power plants here in Germany. RWE is one of the largest companies running those coal-fueled power plants, and it's also one of the biggest producers of what's called brown coal or soft coal here in Germany. The perspective that all this might be switched off quite soon, and that you know, those production sites might have to be closed down, had been weighing on the share price of RWE a great deal. So, of course, the failure of the coalition talks means relief for RWE. This large utility. Maybe not relief for people who are environmentally oriented here in Germany, because of course producing power with so much coal is not very good for our environment.
Right, Conrad, the week has just started, so give us an outlook on the week. What events are traders getting prepared for?
Well, I guess in Nigeria, people are getting prepared for tomorrow when the Nigerian Central Bank will decide on interest rates after a monetary policy meeting. On Wednesday, we will get new information on American monetary policies. Janet Yellen will be giving a speech in New York. And, well, it's going to be very interesting to hear what Janet Yellen has to say at this speech after, you know, it was announced by the U.S. President Donald Trump that she would not become or that she would not remain the Federal Reserve chair. On the contrary, Jerome Powell will be her successor. Now it's going to be interesting to hear what she has to say in terms of monetary policies, also in terms of maybe what she thinks about American government policies. On Thursday, markets in Japan as well as in the United States will be closed for Thanksgiving holidays, so we should get prepared for lower volumes, for fewer sales orders and buy orders of bonds and company shares. While the Americans and the Japanese are celebrating Thanksgiving, here in Germany, a lot of economic data will come out. For example, on Thursday, Germany's third quarter GDP will be updated. And on Friday, we will get the latest update on the IFO Business Climate Index. Remember, in October, this index climbed to a new record high of 116.7 points. So it's going to be interesting to see whether, you know, the election result and the ongoing negotiations about a coalition which failed yesterday might have weighed on business sentiment here in Germany.
Sure, Conrad, I guess we have quite a lot to chew in the week that has just started. And it's not just the U.S. and Nigeria. Kenya is also preparing to do a rate announcement this week. Well, we have a lot to chew for the week, but for now, enjoy the rest of the day. We move on now to the U.S., where stock index futures pointed to a slightly lower open as investors turned their attention to the latest in earnings and data. In the previous trading session, U.S. equities finished in negative territory as concerns surrounding tax reform in the country continued to weigh on sentiment. Data and earnings will remain at the forefront of investors' minds as a number of financial releases are set to be published. Now, looking to data, leading economic indicators are due out at 10 a.m. Eastern Time, while the U.S. Treasury is set to auction off two separate bills. In Asia, markets traded mixed today following a decline in U.S. equities last Friday on lingering concerns about American tax reforms. In Australia, the ASX 200 closed down 11.58 points. The heavily weighted financial sub-index was down 0.41%, while the energy sector trimmed morning gains to rise 0.11%. Japan's Nikkei 225 fell 135.04 points, while the Topix index was down 4.11 points. In South Korea, the Kospi gave up early morning gains to close down 6.32%. Chinese markets retraced losses to climb in afternoon trade. The Shanghai Composite closed up 10.11 points, while the Shenzhen Composite added 17.63 points. In Hong Kong, the Hang Seng Index traded up 0.17%. And away from the markets, oil trader Trafigura has placed the lowest offer and is likely to win an import tender by the Ethiopian Petroleum Supply Enterprise for up to 1.85 million tons of gas oil and gasoline for delivery in 2018. The East African importer was seeking 1.2 to 1.5 million tons of 500 parts per million sulfur gas oil and 280,000 to 350,000 tons of 92-octane gasoline for delivery over next January to December. Trafigura placed the lowest offer at $3.69 a barrel over Middle East 500 ppm sulfur gas oil quotes for gas oil and $3.97 a barrel over benchmark Singapore gasoline quotes for the gasoline cargoes. Two other companies who participated in the tender were PetroChina and Vitol. The tender is expected to be officially awarded later today or Tuesday. Well, we'll take a quick break, and when we come back, we'll look at the index of the Mo Ibrahim Foundation, the ranking for Nigeria. To stay with us.